Good afternoon. Welcome to the Cboe floor. I'm Oliver Renick. It's Tuesday. It's quite an interesting session as markets are trying to hold with the S&P 500 basically at 66 right now, trying to find some support up off the morning lows. A little bit of chop and the risk off continuing from last week, lingering, but crypto at least is holding its own today, and we do have some firmness in that market with MicroStrategy firming up. The charts have been pretty straightforward. Bitcoin's been the weakest. The stock market has been generally powered by the AI names, but there's a little bit of negativity creeping in around some of the AI narrative, notably because Sundar Pichai and a few others high ranking in the world of technology have started to prepare a little bit of a narrative of what might happen if a bubble bursts in that category. But I have to say that one important thing to realize right now is that if the AI bubble bursts, that's a lot more like the tech bubble from .com bursting rather than, let's say, the great financial crisis, and those are two wildly different versions of a bear market. If we do slow down in the stock market, hey Brent, you hear me there? Okay, Mr. Kochuba, I think I
Hey,
got you
Oliver,
now. Hey,
test.
there we go.
Boom.
Bingo. Yes, sir. What up, man? All right, so look, we've talked for weeks, that NVIDIA was going to be the big moment, and the options market had told us that was the big moment, right? So at this point, do you think it's, showtime tomorrow afternoon, basically?
Yeah, the implied move. Sorry about that. Still a little audio lag there. So apologies for that. The implied move for Nvidia, I think, is interesting. It's about 6.5%, which is really pretty in line with previous earnings implied moves. You see ranges of 5 to 7%, and normally you would think this event feels a lot bigger because it feels like the weight of the market is sort of resting on this. And, I was trying to fact check this idea because, he's had this idea like NVIDIA earnings is the most important event, in modern history. But if you look at a lot of these stocks, you mentioned the changing AI narrative. We're looking at CoreWeave, for example, the term structure of CoreWeave, the term structure of Oracle. Those two stocks had, the last I checked, some of the fastest increase in their credit default swaps, for example. And those term structures are really pricing in this event, for example. The S&P term structure is pricing in this event. We have about 2 points of event vol tied to the NVIDIA earnings date. So, this really matters. We also have VIX expiration tomorrow morning at 9:30. So we're going to lose a bunch of volatility positions today. Today's the last day those November contracts can trade. And then on Friday, we have OPEX, right? So there's a lot of positions that are going to shift and roll right in this window. And again, this is right before Thanksgiving. So you could pull this thing either way. Both tails should be, really in play into this event because, vol's not cheap, but it's also not too rich. And that's the really tricky part here. So You can write a narrative for down 5 to 10% or up 5 10%, pretty quickly here into the end of the year. And I don't think either of those statements are hyperbolic. So this is a big event. And again, the funny thing here is that actual Nvidia implied move is not that big. But if you consider that Nvidia is such a huge percentage of the S&P and the Nasdaq itself, there's some reflexivity there where Nvidia moving down triggers the rest of the AI complex, which is again 35% of the S&P and a little bit more of the Qs. And so, there's this reflexive nature of the way that things are going to move off of the tomorrow night's event.
Looking at your tape right now and where the big options volume is, obviously Nvidia is right up there alongside
You know,
the benchmark indexes.
what catches my eye there, Oliver, is Bitcoin and IBIT. We have not seen very interesting volumes in the Bitcoin crypto complex. You mentioned MicroStrategy popping this morning. Bitcoin, I believe, broke 90,000 overnight. And all of a sudden, we're seeing volumes pick up a little bit there. So if you wanted to sort of find some bearish ray of sunlight, all of a sudden those volumes are picking up and Bitcoin's catching a little bit of a bounce. So maybe that break of 90K opened up some buying this morning. Another factor that I want to bring up here, even though the options volume is not massive, Home Depot reported this morning. They suggested that the consumer is a little soft. Stock is down about 4 to 5%. We're seeing big negative deltas there in the Home Depot space, about $55 million of negative delta. The reason this is interesting to me is because tomorrow morning you have Target and Lowe's both reporting, and then I believe on Thursday morning we have Walmart reporting. Could be Wednesday or Thursday morning. Thursday morning I believe is Walmart. So you're going to get a real update on the consumer, which also matters at this moment, obviously, because the other narrative here is that people are expecting rates to go lower, or at least that was sort of the expectation of the most recent FOMC. According to CME FedWatch right now, it's a 50-50 odds of a rate cut into December. So not only do you struggle with the AI narrative, we have this weird moment where inflation seems sticky, so the Feds are hawkish a little bit here, or don't seem to want to coalesce around a rate cut. But now we're getting clear data from the retailers that, hey, look, the consumer isn't that strong. And then we obviously have Black Friday week coming up here. So yes, AI can save us all, but you could also outline the scenario where, like, hey, look, AI isn't that great. NVIDIA pops that bubble. Then we have the retailer earnings, which are showing us that the consumer is weak, and we're not going to get a rate cut. So very quickly, again, you start to go, okay, we're not getting a rate cut. The consumer's weak, and the AI bubble is burst. Like, who wants to be buying that dip, right?
Yeah, that starts to get to a multi-pronged kind of narrative there that could maybe run away from us. I'm looking at Kalshi right now, basically saying the same as the Fed funds futures toss up 50-50. And as that's gone to 50-50, the number of rate cuts in 2025 has also slipped down to 3 cuts being basically a flip, with 2 and 4 we're losing that, obviously. So just kind of different ways to look at it, all telling us that it's not a guarantee. I have to say, though, I feel like 50-50 for rate cuts is a pretty decent spot to be in, Brent, because there are those that would argue, right, if you got to really cut rates with inflation at 3%, then maybe you're weaker than you want to be economically. So I don't know. I kind of like the odds of a coin flip for rate cuts. I kind of feel like that might be the sweet spot long term to be able to just hold.
Yeah, and imagine we get in the scenario where Nvidia crushes earnings, the AI story is restored, and then we get a signal that we're going to get a rate cut in December because of weak consumer data. Then suddenly, you think the market can rally pretty strongly here. So, this is the tough moment here where you can go 50-50 in terms of a rally or a sell-off. And I think the nice thing is here is you don't necessarily need to guess. I think there's some interesting trades ahead of time, but we can see which way this market's leaning on Thursday morning, and then probably expect that trend really continues, with some strength over the coming weeks. The other thing that's interesting here is I think if you want to play long side, you can look at stuff like SMH. SMH calls are cheaper relative to NVIDIA, so you don't have to play NVIDIA directly here. And there could be some other interesting trades as well where you say the losers out of a poor NVIDIA earnings event, like a CoreWeave or like an Oracle, and Oracle reports in mid-December, you can play downside in those names, right, on an NVIDIA miss, and I think get some really great risk reward in those types of trades. If you look at CoreWeave and Oracle tail, skew, for example, there's clearly a lot of deep puts there. I'm imagining or hedging around some of these bond trades related to the credit of these companies. So there's a bunch of interesting trades to do out of these events. A lot of fuel for market moving in both ways, and so it should be a pretty exciting end of the week.
Yeah, the speculation on NVIDIA I'm looking at right now, self-driving, 55% chance they talk that. Domestic and talent, words to be used over the next 48 hours here. To your point about kind of the options focus for the market and the kind of interesting opportunity for trades there. It kind of reminds me a little bit, a couple of weeks ago, Danny Kirsch was on from Piper talking about being long XRT and then shorting some of the other kind of more broad themes. So picking sectors that look like relative outperformers or the vice versa to create this kind of spread trade for equities, I do like. I've been talking about it through the MicroStrategy perspective, where you could be long stocks, you could be long semiconductors, as long as you're short the weakest chart out there. So I feel like that kind of speaks to some of what you're saying as well.
Yeah, absolutely. And you look at some of these names like a Meta, right? I mean, Meta's down, I think, 20% since its earnings report, and its earnings seemed okay. So there's this CapEx story that has created a lot of drag on some of these, most favored names. Tesla's down, 10% over the last really week. So, you have these names that could be a great dip buying opportunity if the narrative is intact. And if you're buying the S&P or the Nasdaq, you're essentially buying that Mag 7 trade, anyways. So I think that's great. And then when you look at the downside, is Nvidia the name that you want to play in the event of a major downside event? I don't think so. I think those Mag 7s would weather the storm better. If you look at some of the names that are dependent on, this AI narrative and some of the retail favorites, like a CoreWeave, which is down 40 or 50% in the last 2 weeks, right? You can see those names and like an Oracle really just getting absolutely just decimated if there's some type of NVIDIA miss, right? So those deeper options can be more interesting. So, just spitballing, selling what is likely to be rich NVIDIA vol, for example, and then going to buy something like Oracle vol, which may hold up a little bit better because of Oracle earnings come up in mid-October. Those could be interesting because you can see Oracle being down 10% out of bad NVIDIA earnings, whereas NVIDIA may just be down only a couple of percent because it's such an established member of the S&P 500. Its volatility may be less, just generally speaking, as opposed to a name that has a lot more to lose if the AI narrative is gone.
Great point. Oracle was pretty active on the last earnings, of course, with the big rally and then come down. I'm going to switch over back into SpotGamma just for a second here, Brent, because I do want to go through the levels on the S&P 500. Looking at the session here today, I'm on the trace right now. We're looking pretty solid. We're holding in. If I rewind it, going back to the morning, obviously we dipped around 10 a.m. Chicago time, but that was pretty much the lows of the day. We tried again right before lunch, and it seems like we're holding up above 66 pretty good, arguably trying to make some headway, but we haven't been able to do it for a couple hours. What should we be watching here?
Yeah, last week I had a pretty bullish leaning for sure, and we were talking about this level of 6,800 where you go, hey, Brent is wrong and you need to be risk off if we're under that level. And that level 6,800 was important because beneath there was where we had this negative gamma that would sort of lead to these big directional swings. So we broke 6,800. Since then, we've just been waffling back and forth in this big range. The volumes aren't that big, right? We did 64 million of total options contracts yesterday. We're not getting this moment where you're feeling this capitulation, right? A lot of zero DT flow yesterday, for example. And so, the big thing that we're watching here is that, yes, we are weaker. Yes, the moves have been bigger, but there's certainly not been this capitulation move. We're in this negative gamma territory where there's a lot of movement around. People are waiting on a big data point here, and we're not quite, finding it. So, there's not yet this moment where you could say this is the obvious buy the dip area. Maybe around 63.50 would be a real washout level. But ultimately, this is an event-driven market, i.e., you give me good news, we're up 2-3% easily pushing that 6,900 level because of this negative gamma. At the same token, we get bad news. I don't think that you're really going to want to stick your neck out buying this dip until 63.50. We start to talk about the JP Morgan positioning, way down there. So that big red map is just telling us, like, look, this thing's going to move. You're going to add in the volatility or Vanna component to this, and that's really what what we're staring at here.
So that's an important point, I think, is that basically it sounds like you're looking for a move here. This is not going to be quiet, which is pretty much what VIX is telling you as well in simple terms to some extent, right? Is that until things cool off, be ready to swing because it looks like there's a lot of open field on your chart here.
Yeah, and a lot of times you get a level, right? This is the level where we're going to buy because flows are exhausted, et cetera. But in this case, it's an event-driven market, right? We need resolution to some of these unknowns. Like, be it the AI narrative, like fine, good narrative or bad narrative, just tell me what it is, right? We're just hanging in balance at the moment. Same thing with the retail story, and I think the Fed. So, you can see 3, 4 days from now, or even 2 days from now, we'll have a much better understanding of what the AI story is. And then second, whether this rate cut may or may not happen, I think based on some of that consumer data. And then you'll start to see the levels really coalesce or form around those narratives or unknowns being cleared up.
It's kind of a flip-flop day to some extent compared to recently because you've got the AI and tech stuff a little soft while the crypto stuff is firm. And that I think is just to your point, which is there's so much here around this earnings, around this NVIDIA report that is going to, I think, clear some of the skies for us, or at least make it obvious, not necessarily in a positive way. I hope it's positive, obviously, but to your point, I think it's going to give us the direction we need to cut through some of this thinner area of trading between 6,800 above, and you mentioned what, like 6,350, 6,360 below.
Yeah, and the other thing here, the reason I still have the bullish leaning, even though we're certainly through that risk off level, is you're gonna get this print, and then we're gonna start all thinking about Thanksgiving, right? And so who's gonna want to deal with this really nasty downside? So I think that Nvidia really has to mess this up, or miss in a material way, or really suggest that this capex issue is a major issue, something that truly drives that bearish narrative home because the vols are fairly expensive. It's not necessarily cheap to buy puts. It's not obvious that puts will pay off in this situation. Then you're facing a whole bunch of time decay, with this upcoming holiday weekend and the expiration as well. So, I really think this is the downside still has to be proven, even though we are, 1 or 2% from the levels we were last week. We're 3 to 4% from all-time highs, which was about 2 weeks ago. So, this again could easily be seen as a mild correction and we buy this dip and get the Santa Claus rally. That's still completely on the table. It just really depends on what the narrative is here out of Nvidia's earnings.
Okay. Brent, if it goes well, you think we return to targeting all-time highs? I mean, what I think is great about all this is that we're only 300 points away on the S&P.
Yeah.
With volatility where it's at right now, that could be 5 days. We can make
Yeah,
that move.
7,000. Yeah, I think
It's not
7,000 is
crazy,
the big
right?
level. Yes. Yeah, ton of open interest there at 7,000. Big round number, fresh new highs. You could see that, into, I think, FOMC, obviously, the 10th. Then you're going to get Oracle earnings as well. And then, a giant December OPEX before those holidays. So I think you could have a real, sharp 2, 3% rally, even before Thanksgiving and into that, typically that Thanksgiving area time frame is pretty seasonally bullish, right? Just because again, people are generally off the desk. People want to sell vol over that little holiday stretch. So, there is a window here for a really sharp rally as long as Nvidia doesn't mess it up.
All right, nice, good stuff. Love that. NVIDIA all really does kind of hang in the balance for them. So we got a little bit over 24 hours, 48 till we can move past this thing. Brent, thanks a lot as always, sir. Appreciate it very much.
Thanks, Oliver. Take care.
You got it. Brent Kochuba, SpotGamma, good stuff there. Love also the volatility term structure that we were looking at for weeks running into the NVIDIA report is to give us some clear idea of what days were going to matter on the calendar, and obviously tomorrow is a big one. Right now we're doing okay. S&P 500, 6648, hasn't changed too much. Time for the Innovator Buffer break. We'll be right back. There are two things about Chicago finance you can't get anywhere else. The first is kind of hard to miss. Everyone's trading options. Cboe is on a 5-year growth streak making billions, and its goddess of grain sits atop the final pit of open outcry. And that's what it's all about. The chance to fend for yourself. A fortress for the self-made trader, and the only still standing in America. The second thing you may not know, but it's worth trillions. Chicago is the only major city in America that's home to 2 of the top 10 registered investment advisors, according to Barron's. That means a steady river of passive money and fixed income pouring into the city. If you think you can beat the market, this is where you do it. If you've got value, price will discover you here in Chicago, the future of finance. Join me, Oliver Renick, from Cboe, Tuesday, Wednesday, Thursday, into the closing bell, live from Chicago. Welcome back to Chicago Future of Finance. Let's go through the risk radar for a moment here, as I think I accidentally clicked that mute button, which is too bad of a habit I'm developing, but we're working through it. Here's the bottom line. The technicals we were talking about with Brent, I think, totally resonate with what I've had on the risk radar, which has been red for BTC, yellow across the board, gold for gold, and yellow for the macros. Now, what we think we've learned here basically over the last couple of weeks is that Bitcoin and stocks are largely separate, crypto markets versus the earnings powered AI, but that's where NVIDIA becomes so important, is whether or not NVIDIA earnings are going to reconnect the risk-off move that we've seen in crypto with stocks, or if stocks are going to go their own way because of the incredible tools and productivity strides that AI is making for us. That's the big question. As we mentioned for NVIDIA, the key line to hold is 180. Otherwise, it looks like breakdown technically. That's really important because right now the drop in the stock has basically held on to a level that we're pretty familiar with. 180 is a pretty good place to be stuck at for NVIDIA. I think everybody's generally happy if you're in that area. If you break through it to the downside, different story then. So there's the line right there, 180. You want to make sure that holds. Want to take a look at the macros here for a second. Back to Bitcoin where it's the weakest. You really fell off a cliff here. But this long-term uptrend line, the one that gets us right to 10,000, is an important one. Stretching it back on the chart, you can see this thing has held basically since 2024. That's a pretty darn good line. That means that if it breaks, it's a big deal, and it did break, so it was a big deal. The bearish divergence I've talked about shows up when you look at the relative strength, the RSI. Looking at the 14-day on that, you can see that it's continued to drop off. That was the sign that BTC was weak, the fact that momentum was not increasing while the price was. So as that's broken down, it really opens up a lot of potentially negative doors for coiners. And basically, I think that would be, if you really want to get into it, if you really want to test it, when you violate this type of uptrend line, then that means you need to go back and test the old supports. That means right here at 80,000, that was a support for BTC. It means down here at 60. One step before the other, 90,000, not too far off from 80. If we do see more selling, if NVIDIA doesn't go well, then that's what I would look for as the potential next testing area for the Bitcoin trade, is whether or not it goes down to 80. Now, that being said, in the short term, MicroStrategy is showing us a little bit of life right now. A nice little pops, 8%, back up off 200 bucks. MSTR found a little bit of support there. If that translates into Bitcoin support, then you go back to the chart, and I think you target the old 100,000. The fact that that's where we had a lot of back and forth before we broke down is suggesting that there might be a little bit of a magnet there. If you break old support, go back and test it. That's obviously a big key level. It's a big whole number. It stands to reason that people probably like that one. So if we do see some firming over the next couple days, then look for BTC to target 100K. Now, does that mean we're going to get back above it? Absolutely not. But when you break down through old support, why not to go back and test and see if it's resistance? If it does turn out to be resistance there, then obviously that's going to be a major problem for the coiners. Now, how does that interpolate with the rest of the market. The closest one is stocks, obviously, which I mentioned, and they look okay right now. This is not a bad area for the S&P to find support at 6,600, much like Nvidia is finding support down at that 180. The S&P 500, you could pretty much put a line right here too at 6,600. Suddenly that looks pretty decent. Obviously you had a lower high here, which is not ideal, but still, you've had worse situations. This is not a preferred outcome, this lower high compared to the 6920 high, but finding support at 6,600 is still really key. So let's see if the S&P can hold it here, especially with VIX. It's still firm on the day. You're far from out of the woods right now. As Brent Kochuba mentioned, prepare for volatility is basically the main message right now. Which direction it goes, well, that's not for me to know, but be ready for big moves. Finally, looking at bonds and looking at the dollar. Do think that these are important because yellow across both of these basically tells you that I don't really have a lot of great answers on it. Now, that being said, the chart for bonds I think does get pretty interesting. If you look at the ZN futures, you're at a spot that looks like maybe you find some support, which we have. Long-term trend line also in the ZN. It shows us that generally you've got bond bids coming in pretty steadily. Now, right now with the odds of a Fed cut at 50-50, essentially a coin flip, the market I think makes sense to be seeing some back and forth here. The fact that you've got a good bit of chop right here at ZN for the last now almost 3 weeks, it tells you, I think, pretty loud and clear that the market doesn't know which way the Fed's going to go at this point. 50-50, by the way, is not bad as far as the odds for a Fed cut go. I don't think you really want to be in a scenario where you're begging for relief from the Federal Reserve. So the fact that you're at a coin flip right now, pretty much wherever you look, I think is actually a pretty decent thing. Look at the Kalshi odds, and you do see that the Fed odds are right at 50-50, which is totally fair. Do we need a cut? Maybe not. But do we need a hike? I think definitely not. So that kind of gets you 50-50. And by the way, that's basically been my interpretation of this for some time, which is that if you don't need to hike, then you should default to cuts. If you don't need to hike, then you should default to cuts if you can. Now, if inflation is going to be a problem, maybe you don't have to cut. But the idea here that we need to keep the economy tight just for the sake of keeping it tight because somebody missed out on a big stock rally, that's kind of ridiculous. A lot of the folks that have the narrative you're hearing about how we need to be tightening or afraid of cutting, I just don't think makes sense. Especially what we heard from Susan Collins last week about the data lagging and our lack of economic information. That's more likely to skew negative than it does positive when people were out of jobs. So to me, on general net, if you really put a gun to my head, you go cuts, but I don't think you really need to. So that brings us back to the bond market though, which is important, as that shows up pretty clearly here. Back and forth in bonds. So that to me makes a lot of sense. That means that you've got essentially a battle going on. If bonds do break down, that'll be an interesting test because it would obviously mean that yields then push higher. If you look at the 10-year yield, we're at 4.1% right now. That's pretty close to the high from September, but not quite there. So technically, even though yields are no longer in this downtrend line from May, they did break that. See, that's pretty much what happened over the last month. Since November started, yields have been a little bit elevated compared to the trend they had been in over the past year. But if they then rip from here and we start to see yields move, it's going to be really important to see what stocks move with that too. Basically, I would look at the regional banks to see if there's weakness there, which there was over the last 48 hours. They got hit pretty hard. That's one area that could struggle if you see yields start to go up. But I don't really think you're going to see bonds getting sold off right now in a fairly dramatic fashion. And if they do, it's probably because the stock market's rallying back and we're going risk on. So don't panic about it just yet. Yellow across the board. Last one is gold real fast, as I didn't hit that one. Gold looked like maybe it was going to make a move. Then it got stopped back out at 4,200, finding support at 4,000 again. I think once again you have a pretty good case for a line in the sand right here at 4,000 on gold, which is why I hold it green. It's arguably the one that's still in the clearest uptrend. All right, there's your risk radar. Be right back. All right, welcome back here. We got stocks with 18 minutes left roughly. S&P 500 doing all right. 66.34, down 0.5%. We're drifting a little bit towards the lows of the days, but we're trying to hold in here. We're trying desperately to hold in. As we dipped earlier this morning, then found some strength. Joel Hawthorne, my man in Chicago, he's been trading, watching the market today, joining me. Joel, what's up, man? What do you see? Tell me what's going on.
Oh man, thanks for having me, Oliver. Today is a pretty interesting day overall. I think today has been really kind of one of those moments where we're still looking at crypto, we're looking at Bitcoin prices hovering around that 90K mark. I think the tail really is just Mag 7 still taking a beating. And interesting enough,
Yeah, Mag 7 got blasted again today, right?
I'm sorry.
Mag 7 got hit again with NVIDIA down. They really got to hold this level, right?
Absolutely, yeah. This level is key, I think, overall. I'll say this. Right now, SPX bouncing off of its lows today. That 6600-ish level, 6575 level. That's going to be the tell of the tape. Another thing I would say really quickly to you is how futures have been responding overnight. How E-mini futures have been responding overnight. How they've been trading overnight will determine how we look in the morning, and definitely probably setting up how we're going to settle before NVIDIA earnings tomorrow after the close.
So there's going to be action around the clock here, basically. I mean, I'll be same story. I'll be watching crypto after hours too for any indications. This is the week, all the volatility was built up around this. All the options premium was all jammed into this NVIDIA week. So it seems like we should be moving by Friday.
Yeah, we should be moving by Friday. And you talk about a lot of that option premium. VIX today trading the high of 2584. And even on this rebound we've seen, even though we're kind of pulling back now as we go into the close, 15 minutes before the bell, VIX is still trading around 24. So you just never really know right now. We kind of thought that dip buyers coming in midday today was probably going to settle things, but it looks like there's still some fear here. There's still some concern. So it'll be interesting to see what happens.
I was kind of thinking the same, that the line in the sand at that 66 looked pretty good, but VIX is just not letting go, right? VIX is just keeping a pretty tight hold on the market, telling us that this is, there's going to be action here. This is not going to be, we're not going to slide away from this easily. This is going to be, at least 1.5–2%, moves. I think we're getting there pretty close. Maybe not 2, but it seems like maybe S&P's 0.5% isn't quite on par with maybe what Vol is suggesting.
Yeah, right now the most active strike trading in SPX right now, going into the close, is the 6700s. The buyers of those calls are leading slightly ahead of the puts. And I'll tell you right now, with price trading 66.31 currently right now, doesn't look like that 6700 is anywhere near going to get hit. As a matter of fact, it looks like we're pulling back right around that 66.25-ish area. So I would say bears are still here and they're going to be present, man. I'll tell you right now, I've been looking for some positions to put on overnight. My hands off the keyboard for the rest of the session. I'm not going to carry anything overnight here.
Yeah, too risky, too much hanging in the balance.
Absolutely. Real quick though, I want to say something to you. That MicroStrategy short you've been talking about, you and I talked about it privately a lot. Hey man, you're looking like a genius with that one. Great job on that one.
Thank you, Joel. Appreciate it, man. It's getting a little bit of relief today. Bounce at $200. The next question, because at first it worked because the long Bitcoin side was working, while MicroStrategy was kind of meandering, and then obviously the short MicroStrategy part really started working here in the last several months. Now, I wonder if the two align, which they kind of have been now for better part of a month and a half. BTC and Master align. That's not going to be a great combination. The other thing I've noticed, Joel, too, is like the kind of negative sentiment where like people are kind of openly talking about the financial engineering of that company as being a bit fantastical. and almost comical from some of the stuff, the Twitter kind of, I don't know, I could be just grasping at straws, but it seems like some of the kind of commentary around it in the community has shifted a little bit more critical and kind of negative.
I would agree with that. I don't think you're grasping at straws. I think that kind of some of the things that we've all heard on our trading journey is kind of dollar cost averaging down is what it appears that that company is doing most days. On any pullback, you just you see these tweets, if you would, about how there's more Bitcoin being bought. And if you're constantly buying the low and it keeps going lower, then I mean, at some point, right? We've all heard the market doesn't have to be in your favor when the trade goes against you. I mean, you keep buying losers and buying losers, it's going to reflect in your P&L. And I think, who knows, right? There's a long-term projection of Bitcoin that a lot of people have that it's going to be, maybe 10x where it is right now or so. We have to wait and see that. I don't know if I'm there. I don't know if I agree. I'm a trader. I just care about price, price action and where's the edge. And I just don't see that at the moment. So I would have to agree with you right now. There is some skepticism, and rightfully so.
Yeah. The gap merging quite wide between Bitcoin in the purple, MicroStrategy in the red. A nice look at the options trading in S&P, Joel, and I think good thoughts on having a pretty low-key evening and morning. Let the dust settle a little bit. Don't overdo it. I think this is one of those moments in markets and trading where if you're tempted to try and put it all on the line because there's a big event, but boy, those are the days too where you can really get wiped out the most.
Absolutely. I mean, I guess the question, the big question is losing more painful than losing money more painful than making money? And if it
right,
is, then you got to stay on the sideline.
Yeah.
Yeah. And if it is, I mean, you got to stay on the sideline a little bit, or just take base hits, right? You got a really smart trader that you talk to who uses a baseball analogy. I talked to a while ago, Scott Bauer. He told me years ago, about taking base hits, and I like that analogy. So, yeah, I think sometimes taking small trades, getting on base, that's the way to go.
100%. Nice, good transition for us too. We got Scott's guy Charlie on deck. Thanks, Joel.
All right, man. Thanks for having me.
You the man. Appreciate it, Joel Hawthorne. Thank you very much, sir. We got Charles Moon on the line, joining from the Prosper Trading Academy. All right, Charlie, we got NVIDIA tomorrow. We got Joel's point about not pushing it on days where you could have monster moves. But also, the gambler in me is kind of looking at all the premium built up around this week and saying, maybe I don't want to sit out completely on the sidelines. Where do you stand?
It's about your risk tolerance, man. You got a little risk in you. You got to take it. This is the time to make money. If we're going to see stocks make progressive moves in 2-day periods that previously took weeks, maybe week and a half, I feel it's always worth the shot. It just depends on the individual and what kind of risk tolerance they have. We've seen the volatility creep back up. You can see the VIX knocking on the door 25 earlier today. They've retraced back a bit. But, in these environments, I just like being fast and swift. I like being in and out, not trying to be married to any side here.
Yeah. Charlie, when you think about the kind of hot stuff, the action, where is it? So what, NVIDIA, you want to be playing in NVIDIA's playground tonight? Tomorrow?
Ultimately, this is the way that I'm looking at it. I think the next week and a half is possibly the most important moment of 2025. And that's saying a lot, comparably
with that, yeah.
To, how big the market has swung. But, we're talking about traders, looking to go on vacation right into Thanksgiving. And usually institutions, Wall Street, and a lot of the big money traders, they tend to stay hands off or get into more of a liquidation mode following from Thanksgiving to Christmas. Now, historically, we call it the Santa Claus rally. We tend to just grind up, but these are low volume movements. And, a lot is riding, obviously in relation to NVIDIA. We've seen the unraveling of a lot of the AI growth stocks, but there is some optimism, right? NVIDIA is NVIDIA. NVIDIA is now the largest market cap stock. They're the ones that are moving the markets right now. today in terms of performance. The market did come off the lows. They're now coming back off the highs. But what's really standing out to me is the performance of the Russell. Russell's positive today.
I
They're
saw
showing a
that,
lot
yeah.
of strength. And
IWM
the
right
fact that
here.
they're showing strength today could be a good indication that the market might want to put a little risk on leading into Nvidia earnings.
Retailers too, XRT, part of the Danny Kirsch trade, those are firm today as well. So there's a few little outperformers in the mix. Obviously, we mentioned a little bit of bounce and master back there too. Strategy, Tourniquet getting some of the bleeding there. Tell me what you think is going on in the crypto world, Charlie, and what it tells us right now, if anything.
I think a couple of weeks ago, Jim Janos talked about closing out his position where he was long Bitcoin, short MSTR. Um, Effectively, Bitcoin continues to soften. They got back above 100,000. They retested that level. It folded like a lawn chair. Crypto, continues to remain volatile. It's going to remain a volatile asset. People are, a little worried about this pullback, not realizing that this is historically a typical type of pullback. Um, are we under certain threshold levels that could kind of cause pause or maybe scream to the retail trader, have them concerned about what the overall long-term effect could be? Yes, but a lot of this is highly dependent on what the market does. Crypto has just been lockstep with the Nasdaq pretty much all year for the last 2 years, and right now the Nasdaq, it's underperforming. We've seen I think Meta, since their earnings, they dropped below their 200-day moving average. They dropped nearly $100 since then. And yes, so these high power companies are, showing signs of weakness that we don't traditionally see. But that's not the case with everything, right? Apple still remains trading within 5-6% of their all-time highs. Amazon retraced a little bit. Microsoft retraced a little bit, but Google just made new all-time highs. And so we're seeing
Google looked really good.
Yeah, we're seeing pockets of strength, pockets of weakness. More than anything, if I'm noticing anything, just that rotation's getting faster, and rotation isn't nearly as transparent as it used to be, right? It used to be we would rotate out of tech into utilities as a safety play. We would see some sort of safety into bonds, retracing from gold. But, a lot of the times we've seen Bitcoin and gold move up in sympathy. Now there's starting to be a divergence. So it just seems like the market is very sporadic. It just seems like a little repositioning or liquidation. And at this time of the year, a lot of, obscure things tend to happen. As far as I've seen with earnings season, companies still have been reporting strong. The price performances may not be, reflecting that, but, I don't think the sky is falling just yet. But we'll find out tomorrow if that's going to be the case.
Well said, and I do think the chart of gold, since you brought it up, is worth a look. To me, that's the only one that still looks like it's got a green light on my radar. It does have that lower high, but at least it has stabilized here. So I feel like that's worth mentioning. Is still, if the market starts to show some life. The catch is gold was so good. I'm not sure gold is going to be a great place to hide out if Nvidia gets clobbered. I feel like if it's risk off, gold might see risk off too, just because it was such a big runner for so many months.
Yeah, 100%. I just,
agree?
it's, for me, I think the big thing with Nvidia, right, is the growth story. And, Nvidia's been just destroying, analyst expectations in terms of revenue, right? From booking numbers, from data center numbers. And so all of a sudden, if we see a deep retraction, that only solidifies the idea that the valuation of the AI growth story has gotten way too far ahead of itself, especially with the Fed. At this point, the market is pricing that there's a less than a greater chance or less than even a possibility that the Fed is going to cut rates in December. So, this just becomes more of a corrective measure for the markets. But, again, the short-term pain that we're going to see is going to turn into great-term growth. It's just all about proper timing. There's nothing wrong with shorting the market short-term and then buying it back at a price level that you would love to have. How many people on your show or how many people have you talked to that have said, man, I wish I would have bought Meta a year and a half ago, or man, I wish I would have bought Meta in April?
Yeah.
It's the same thing. Well, we're right back to those levels. Do we think that Meta, one of the most powerful, if not the most powerful company in the world, the one company that controls, in my opinion, one of the most powerful things that you could have in this world, which is communication, do we think that they are now not going to be making 40, 50 billion dollars per quarter like they typically would? This is just going to turn into a great term opportunity. Let's make sure
I'm
we
with you.
keep that in the picture.
Charlie, to that point, my kind of closing thought here is that I said this at the top of the show, which was if there is an AI bubble, and there's some kind of chat about it from some of the senior leaders of these companies, okay, maybe we do need to let some air out. A bubble in the AI market is much more like the dot-com tech bubble than a financial crisis style bubble. Those are two very different things. Overvaluation of world-changing technology is something that routinely comes with markets, sometimes more extreme than others, but it doesn't mean that there is like an explosive structural financial risk. Those are two totally different things.
Yeah, no, and I'll say this, there are segments of AI, right, that I believe mirror exactly what we saw in the dot-com bubble.
Sure, yeah, maybe a lot.
Let's just point on quantum. Anything quantum related. If we think that these companies like D-Wave or Rigetti have any chance against these, the Googles or the IBMs of this world, this is where I would say this is where we could see an actual true real life bubble where these stocks got oversaturated and they're going to come retracing back to earth and be single digit stocks again. But, do I think that the actual push towards AI and the development of AI, integration of AI is a bubble? No, I actually believe this is the future. I believe that the CapEx expenditures is alone going to tell you that.
Yeah, spend away, baby.
Yeah, Microsoft, Google, Meta, they're not going to stop spending. I probably shouldn't have disclosed this, but my wife works at KPMG, one of the big financial four firms.
Careful.
Guess what they're doing? Guess what they're spending on?
Yeah, AI, right? Everybody.
Yeah, she's actually heading that, well, not heading, but one of the executives that's helped pushing in this introduction of AI, because every single one of their clients who tend to be the 1% of the 1% want AI.
They're on it. Charlie, man, great stuff as always. Thank you very much, sir. Appreciate it.
Good having me, man.
Good stuff, Charles Moon, Prosper Trading Academy. Much appreciated.